Today, we will examine Tesla's 2023 third quarter results. First, Elon Musk started by saying Tesla's quarterly result was negatively affected by global factory upgrades, but the company remains focused on the three main objectives, which are reducing cost per vehicle, investments in AI and autonomous driving, and generation of positive cash flow. First, reducing cost per vehicle. Its operational and financial performance was affected by factory idle costs and its planned shutdowns to support production rate increases. But despite this, the cost per vehicle was successfully lowered to around $37,500, down from more than $39,000 just a year ago. Also, due to rising interest rates, Tesla lowered vehicle prices to maintain parity in customers' total monthly cost. Overall, there is an inherent lag in cost reductions, so this decreased GP margin from 25% a year ago to about 18% this quarter. Next, Elon Musk discussed investments in AI and other growth projects. He views AI investments as a game changer with the potential to make Tesla the most valuable company in the world by producing fully autonomous cars at a scale and highly useful humanoid robots. Specifically, Tesla's vehicle has accumulated over 500 million miles driven with the FSD beta, and as we can see in this chart, the number is growing more and more rapidly. A 10,000 GPU cluster of NVIDIA's H100s was recently completed, a significant achievement in the computing capacity. This is important because the insufficient computing capacity was a limiting factor in advancing full vehicle autonomy up to now. Additionally, in the third quarter, Tesla deployed 4 gigawatt-hours of energy storage products. Thanks to this, the energy division became Tesla's highest margin business and even reached its record profitability with over $0.5 billion in quarterly profit. Third, on positive free cash flow generation, Tesla generated approximately $8.9 billion in operating cash flow and around $2.3 billion in free cash flow during the first 3 quarters of this year. A driving factor is that vehicle deliveries in the third quarter outpaced production and are on target for this year. But going forward, the Cybertruck may take 12 to 18 months to become a significant cash flow contributor. That's because, even though the demand for this truck is high, with about 1 million reservations already, transitioning a prototype into volume production of such a unique design is incredibly difficult. On a closing note, Musk reported that a partner vehicle leasing program was introduced in the US, offering a standard Model Y for as low as $399 monthly. Also, he reiterated Tesla's long-term vision rather than short-term profit. Now, let's inspect Tesla's third quarter performance numbers, starting with its operating metrics. From the vehicle segment, Tesla produced a total of 430,000 vehicles, up 18% year over year. It also delivered 435,000 vehicles, which represents an increase of 27% year over year. The QoQ decline in volume was caused by planned downtime for factory upgrades, but the 2023 whole year target volume of around 1.8 million vehicles remains unchanged. Delving into Tesla's energy front, which contributes about 7% of total revenue, the solar deployment was 49 million watt, down sequentially and year over year by 48% due to high interest rates and the end of net metering in California, creating downward pressure on solar demand. But its storage deployment was increased to 3.9 thousand megawatt hour, representing 90% increase year over year to its highest quarterly deployment. This continued growth was driven by the ongoing ramp of Megafactory in California toward a total capacity of 4,000 megawatt hour with a phase 2 expansion. Lastly, Tesla's service and other businesses' gross profit has made a good comeback, with supercharging, insurance, and body shop and part sales being the core drivers of profit growth year over year. Specifically, pay-per-use supercharging remains a profitable business for the company, even as capex levels scale. Tesla is focused on materially expanding supercharging capacity and further improving capacity management in anticipation of other OEMs joining its network. Moving on to the financial performance, the total revenue was $23.4 billion, up 9% year over year, because of growth in vehicle deliveries and other business segments, and the offset from reduced average selling price. The largest contributor of $19.6 billion was total automotive revenues, up 5% year over year. Energy generation and storage revenue was 1.6 billion, up 40% year over year. Services and other revenue was 2.2 billion, up 32% year over year. As we can see here, Tesla's revenue growth, despite slowing down, is still well above S&P 500 companies as well as the automotive industry average. Operating expense was $2.4 billion, up a hefty 43% year over year, mainly due to the R&D expenses, which was 1.2 billion, up 58% year over year. After subtracting all operating expenses, Tesla is left with 2.4 billion in income from operations, down from 3.7 a year ago. Although the lower profit and margins are disappointing, Tesla still has a higher margin than its auto industry peers. Operating cash flow was 3.3 billion, down from 5.1 billion a year ago, but capex was 2.5 billion, up 32% year over year. As a result, its free cash flow was about $850 million, which is 74% lower than a year ago. Cash and cash equivalents increased sequentially by $3.0 billion to $26.1 billion, driven by financing activities of $2.3 billion and free cash flow of $800 million. So overall, even though Tesla's cash flow is not fantastic, it showed strength despite aggressive investments for the future. For the investor Q&A, we divided it into three parts. First, regarding production increase. When asked about the expectations for 2024 Cybertruck deliveries, Musk estimated an annual production rate of about 250,000 trucks, but did not expect to reach it until around 2025. He also noted that as Tesla explores uncharted territory, predicting exact outcomes is challenging due to the truck's unique and innovative design, which makes its production more difficult than traditional vehicles. Next, regarding capacity expansion plans for its global factories, Musk said current priority in the Berlin and Austin factories is to maximize output from existing lines by focusing on efficiency improvements. And at Mexico, Tesla is working on infrastructure and factory design in parallel with engineering development. Its construction and long lead times are underway, but management is cautious about going full scale because they want to make sure cars are affordable. And the majority of car purchases are influenced by monthly payments, which are in turn negatively impacted by rising interest rates. The focus is on affordability rather than advertising because informing people about great cars that they cannot afford doesn't help the company. Now, on the second topic of cost reduction, when asked about progress on the 4680 cells, Musk claimed that its production in Texas, Tesla's primary cell production facility, increased by 40% quarter over quarter. For those who are unfamiliar, this battery is a new type of large lithium-ion battery cells with 46mm diameter and 80mm in height. Their large battery size and capacity provide higher energy density, which extends the cruising range of Tesla cars. With the increased volume and yield improvements, cell costs have consistently improved within the quarter, but more work is needed to reach steady-state goals. Phase 2 of the Texas facility is under construction and expected to start production in late 2024. Regarding Tesla's rate of improvement, Musk outlined their successful reduction of around $2,000 in costs through engineering innovation, supply chain optimization, logistics efficiency, and operations improvements like its factory upgrades. Tesla's approach is a game of pennies, chipping away at the cost of each component. However, he does warn that the new products, like Cybertruck, may hamper cost management in the short term. The last Q&As were about AI, autonomous driving, and robots. When questioned on plans for AI, Musk maintained that non-driven robotaxi is making exciting progress in autonomy. Specifically, the self-driving software is performing well. Also, Optimus and humanoid robots are learning quickly to perform tasks. Although he's not ready to discuss Optimus in depth, he outlined that even though it still needs a long time, it also has come a long way. For example, a year ago, it could barely walk, but now it can do yoga. Now, let's look at several important news on Tesla this quarter. First, starting in 2025, Toyota will adopt Tesla Charger for its North American EV models, just like how other automakers like GM, Benz, Nissan, and Honda have done already. Tesla's charging system is increasingly gaining acceptance globally, even in markets traditionally favoring other standards. Next, Tesla reportedly ramped up a partnership with TSMC to produce its chips for the custom-built Dojo supercomputer platform. To elaborate, Dojo is a design for AI machine learning and video training, which is crucial for Tesla's self-driving technology. Its initial development was presented at Tesla's AI Day in 2021, and Tesla announced their intention to have full cluster by Q1 2023. Dojo officially came online this summer, with a plan to reach a 100 extra flop capacity by the end of 2024. Furthermore, Morgan Stanley recently noted that Dojo could become a significant contributor to Tesla's bottom line in the future. And the last news shows Optimus robot performing yoga moves and sorting color blocks. This demonstrates that it can now locate its limbs in space, using its vision and Tesla's onboard neural net for various tasks, which makes a significant improvement from less than a year ago, when it had difficulties walking at the Tesla AI Day event, trailing behind competitors like Boston Dynamics Atlas. Tesla initially announced its plan to develop humanoid robots in 2021, with the aim of utilizing them in factories or as companions to humans. Additionally, Jim Fan, a senior AI scientist at Stanford University, praised the hardware quality of the Optimus, especially its human-like five-finger hands. Okay, that's it for Tesla today, and thanks for watching this video. If you want such detailed updates for other big tech companies, please press the like button and subscribe to the channel. Thanks guys.